Hi, Warriors. Well, if you did your work over the weekend, you know your levels, you know what you're looking to do. Okay, so there won't be any impulse trading. You have your plan. Everyone ready? How you doing, Mike? Steve? Pretty quiet board so far. Ingmar came in. Good morning. Brand, good morning. Ryan, how are you? Thando, John Hawkins, James Groom, Saloom, how are you, buddy? Will, Brand was born ready. Okay. So ready for what? Steve's here with us. Maybe we'll ask Steve a question. What am I doing here? What's this? No, that got up there. Okay. Yeah,
Monday morning
Ryan.
wobbles, Dale.
Yeah, I've had some coffee, but anyway,
Pour some
I've
on your
been
computer.
I've been up for a while. So all right, to me, this is a pretty important week in the dollar. I actually bought a little because I mean this looks like the ball game here. I think we could still do this. I'll buy more. So I'm scaling the dollar, buying a little bit here. I think that we could still get a test here, and then you're wrong here. So I mean, if this was going to be the bottom for higher levels than 100, it needs to dig its heels in here and not take out this low. And Euro, was that it last night? Or I have this kind of a megaphone plus a wedge formation in here in the Euro. Last night when we were here, I didn't do anything. I thought I'd wait and see if we could challenge last week's highs. It did not do that. It's weaker than cable, but we'll see if there's one more push up. And actually, I thought the pair that had maybe the most relative strength right now and ability to turn good would be Aussie. So let me turn to you, Ryan. EG, I know got to your level at 86. You happy with the action you're getting off that level?
Yeah, I am happy with the action off that level. I've added into my longs there. I've got a bit of a build going on. I've, this is one of those moments where it's looking okay, but in the longer term, but in the shorter term, it's not looking okay. That 86, 85, 95 was the 38.2 of the move up from
Okay.
pretty much the beginning of June. So it held there. So in the wider picture, it's looking okay. Yeah. So what was that last end of May that move up?
Right. Yeah.
But in the shorter term, we've had two cracks at the high, and or sorry, we've had two attempts up there at those highs. We failed the first one. We couldn't get close to the second one, and then we've made a fresh low under the prior low. So this bounce isn't looking too hot either. So short term, it's looking a bit bearish. Um, Longer term, over a couple of months, it's still keeping its bullish tone.
Okay. Euro looking bearish to you up here?
Not particularly.
Struggling up here? Okay.
No, it's not. It's holding on, isn't it? We're
What
trading
what
between.
what would have you become concerned with the euro technically back under 16 and a half or so?
Yeah, in the short term, yeah, probably back under 16. You can
Okay.
quite clearly see over the last couple of weeks that's been a bit of a pivot area. We will look even more bearish if we're under 15 and holding.
Okay. Can you think of a narrative that would push the dollar up this week with Jackson Hole or I mean we had pretty hot PPI
Yeah,
and anything that um, you think higher yields will translate into higher dollar?
Yeah, it could well do. I mean, that's obviously going to be the main event this week, Jackson Hole, and whether Powell, sort of gives a nudge to a September cut, or he looks at the inflation data and says, I'm not going to panic over one jobs report when I've had, 4 or 5 inflation readings that have all gone up. So I think he walks a fine line and, keeps a cut on the table, but obviously then talks about inflation and they'll need to see more weakness in the jobs numbers to get it going down. But I think for the euro to go down and the dollar to strengthen, if you're talking euro dollar, it needs a complete collapse of these talks between Ukraine, Russia, US, and whatever. And we've got a second summit today on that.
Yeah.
So, if that's bad news, I can see risk getting a hit.
Okay. Maybe it's good news that lasts a day.
Yeah.
we're
still waiting for some.
Yeah, could, where there's hope and they sell the dollar off, but, negotiating with Putin is, not a certainty. It's not a certainty either once you have it. So
it's all about how much land he's willing to give up, how much land Ukraine want back. That's the crux of this whole deal. I think if they sort something out with that, then we should get some sort of resolution.
Yeah, I think people forget that they were the aggressor in the war, but they're still going to end up with territory, a lot of territory. They want the whole Donbass, right?
Well, it's all been about the minerals. It's all been about
what's
in the holes.
Who's the aggressor at the end of the day doesn't matter at all, does it?
Well, it used to.
Those are ethical dilemmas, I mean. But deals and settlements don't happen based on who's right and who's wrong, who is moral and who is immoral. Power determines the outcome. That's how it has always been. And especially you Americans should know that much better than anybody else.
Okay, thank you, Professor.
Just stating the obvious.
Yeah. Well, you know what Joe Granville said about the obvious? If it's too obvious, it's obviously wrong.
Unfortunately, it doesn't work like that in many, many cases, right?
Yeah. So what do you think's going to happen there then, Steve? You think that
there's zero chance in a million that Ukraine can settle something without
guarantees, security guarantees,
without giving ground?
Okay.
Because Russia has already, conquered some of it. So obviously, there cannot be an agreement without, finding a solution somewhere in the middle, and somewhere in the middle is not a good outcome for Ukraine, is it?
No. Do you think there should be? There also used to be a thing called war reparations, which I'm not hearing anything of. And I guess that didn't matter who was the aggressor either. It was just the winner was able to extract reparations out of countries.
Yes, that is more or less correct. And the question is, war reparations, okay, who's going to, force Russia to pay war reparations, and how exactly are they going to be doing that? So, theoretically speaking, you're absolutely right once again. But, as I said, unfortunately, reality has very little to do with, in these cases, right? With,
well, I mean, they could start with the Russian frozen assets instead of buying more weapons for Ukraine. There's a lot of cash here with what they froze. So if you're talking about power, we do have the power to do this. So it's a choice of not doing it, of not using those frozen Russian assets for the reparation of the country after a peace deal. Right?
Yeah, but don't part of negotiations as well.
Yeah, that's going to be, first of all, part of the negotiations. Ryan is absolutely right about that.
Yeah.
Also, don't don't forget that one way or another, the US and other parties involved are much less interested in reparations, right?
Yeah.
Because it's not going to, reparations are not going to be paid to the US, they're not going to be paid to the EU, right? And each party involved here has different interests about what they're looking to gain from a settlement.
Yeah, but there's the US, Europe, and everyone else is, Ukraine's on the hook for a lot of money to go back for all the arms and everything, money that they've had pumped in by the US and EU. So they're going to be after their pound of flesh one way or another.
Mm-hmm.
Oh yeah. So I don't believe during the Biden administration they were running up a tab. Were they loans or were they just given the military support? I don't think they were loans.
I don't think that either, but at the end of the day, does it really matter? No matter how they would be assigned, at the end of the day, one way or another, we know that whatever help was given, and I'm not talking only from the US side, was looking for some kind of a, tit for tat. And sometimes it's not very direct what you're getting back for the money you're giving. Sometimes you're giving the money just because you want to hurt the other side, following the usual, the enemy of my
enemy is my
yes,
enemy of my enemy is my friend.
Yes, exactly. In some other cases, to in essence put a thorn in the back of the other party that's involved because you're looking to hurt them. And in most cases, of course, it's multifactorial, right? It's not only one thing that you're looking to gain from being involved directly, or in this case, indirectly.
Yeah. Well, good to hear your voice, buddy. And
it's good to get back. I mean, we got some nice rest.
You've been on a nice little hiatus too, right?
Longer than me. Longer than me.
Well, he's older.
Who? He's older.
Ryan's older. Oh well, that's why
Ryan's older. Yes.
I'm only 25 though.
Huh?
I'm only 25, so he must be.
Yeah. I thought you were 24. Sorry, Ryan.
They say the business could age you quickly. Anyway, so before I let you go, Steve, anything compelling to you out there on the landscape of currencies?
The DXY is holding on the brink of a breakdown from the recent consolidation. So definitely the dollar is in the spotlight. It looks very vulnerable to me. It still looks very vulnerable to me. And of course, there are a lot of things in the very, very near future. Fed policy, we've seen several factors come in. You already mentioned the geopolitical factor, which is less important for the fate of the dollar. We have some stagflation fears coming in the spotlight again. We have again pressure for the Fed to cut. Currently, assumptions are that we might get a couple of cuts by the end of the year, but I don't think they're a given either. We have some data that are going to be especially important following the previous jobs report. So I'm pretty sure that the start of this financial year, let's call it, because, typically the year starts in 1st of January, but practically, let's say September is always the beginning of a new season. I think the end of the calendar year, the beginning of the new season is going to be very, very interesting and is going to be shaping what is going to be happening going forward. But I still believe that until proven otherwise, the dollar remains very, very vulnerable.
Yeah. So I've asked a lot of guests and people I've talked to that a lot of people are describing this as a weekly in gold, Steve. This as consolidation.
Yes.
And my question is, how do you know it's not distribution?
You don't. You can never, our job in the financial markets is not reading the leaves, right? It's not guessing the future, it's not using astrology, which or any other questionably non-science. Our job is looking things through the lens of statistical probabilities. And what we do know as a statistical probability is that in most cases, consolidations found in strong trends, and I think there is absolutely nobody that can argue against the obvious fact that gold has been in a very, very strong uptrend, right? So in most cases, consolidations found in strong trends, regardless of if they're, bull trends or bear trends, in this case, a bull trend, are most of the times resolved in the direction of the trend. So can it be distribution? Yes, it can. But if you had to bet in one direction, what would be the smarter one to bet for? And it would be a bullish breakout. Of course, nobody is forcing anybody to commit in one direction or the other while we're still consolidating. That's why we have breakout trading, right? Because we have a well-defined symmetrical triangle. Somebody can remain if they have no position already, because if you are already bullish and in the money, you have no reason to quit your position. You can just hold it and see how it goes. If you have no position, you can, buy it in case of a bullish breakout, or sell it if you're really looking for that type of trade in case of a bearish breakdown.
Yeah. All right. Well, I think the dollar is going to settle it. So we'll see what happens here.
Dollar is going to play a big role for sure.
Yeah. It's I think the biggest deal for the fourth quarter.
Yeah. Although gold's move doesn't only have to do with the fate of the dollar, because gold has been in a massive multi-year rally against practically all currencies across the globe, and that says a lot. Right? And it has to do with the fact that, especially following COVID, we've had, as everybody understands and admits by now, we've had a massive devaluation of currencies in real terms. And that was across the board. Yes, some of them lost more than others, but all of them took a very, very big hit. That's why we had a huge inflation issue, right?
Mm-hmm. Okay, so if we had a strong dollar and a big dollar rally, that would reverse it. My major pushback on gold, Stephen, is that who isn't bullish gold? You know anybody?
I'm not sure. I know that
a bear case.
I'm not sure. I know that many people are indifferent to what gold or silver are doing. Many investors don't really even spend time thinking about them. Right. That's a fact. Right.
Many investors in our universe, you write a bearish comment on gold and you'll get hate tweets. That's how it used to be for NVIDIA and things like that.
No, I understand what you're saying. And at some point, inevitably, gold is going to have some kind of a deep corrective move. I mean, don't forget, it is an asset.
It'd be healthy. Wouldn't it be healthy? 2,900.
I mean, we went not even 3 years ago, less than 3 years ago, we were trading at 1,600. Right, in October of 2022, we were trading at 1,600, if I remember right. And literally, a few weeks ago, we were trading at 3,500. So yes, obviously nothing moves in a straight line. Nothing but the Turkish lira moves in a straight line. That's a kind of a joke.
Are you worried about the instability of your neighbor? He's arresting mayors and everything that's happening in Turkey. He might need some kind of distraction from what's happening
that has
internally.
That has been the case for many, many years, though. And to be honest, we've got used to it. And we're in the Eurozone. We're also a member of NATO. If you're asking me if I think there is a real, reliable, actionable threat, I don't think there is.
Not on Greece, but they were behind who took over Syria.
Yes, but don't forget that that's a different story, right? Because
that's the story I'm talking about.
It's a different story intervening in the Middle East, which we know is a hellhole, and a different story messing up with, a European Union and Eurozone country, right?
Yeah. Okay. Your meds are working great, man. That's all I could say. Yeah. I'm
still at age. I'm still at age that if anything happens, they will actually be calling me. Because don't forget we've all been soldiers here, right?
Yeah.
And I was actually specialized in aircraft refueling in the Air Force.
Wow.
But I'm not really worried.
All right. So we could relax about our friends in Greece. Let's bring in K-Man to talk about.
Hi, hello everybody. Hi Dale.
How are you, buddy? You want to talk about U.S. dollar yen? Had a couple day bounce.
Do I want to talk about?
It's hard to have conviction today, isn't it?
Ryan, no, I don't really. I told you last week already. I don't have many convictions, but I do. I'm okay to trade a couple of those ranges because that is still where I think we are in right now. And I completely agree with Steve on the fact that we are ahead of potentially the next season, how Steve calls it, or the next leg of stuff to be decided. And but for the time being, we are in this waiting pattern. But I look at the yen crosses. They are still holding up in general, so I still can't be a fan of being long yen, at least not for longer than corrections. So when I do any scalping or jobbing, it's usually rather to the yen short side if I do something. But for the rest, I think this meeting, Europe, Ukraine, I'm not sure whether we're going to see any results. The territorial dispute, I don't see how they can agree on what at least Putin served up to Trump on Friday. I don't see how they could, because they're actually asking for an expansion of the territorial gains. For the rest, there's an interesting one, and Stelios talked about that last week as well, that dollar Noki. But we've been talking about that with one or two of our roomies in our Forex Analytics community too. I'm starting to find it could get a little bit toppy there. So in the next 1% or so top side, I'm maybe looking to start a bit of a short. You're on X, Dale?
I just wanted to retweet our webinar.
Oh, okay. And
I run the live feed too under my
okie
handle.
dokie. Yeah. Good man.
Eyeballs, bro. That's the name of the game. I have a question, and I'd like to bring Steve back in here. I talk to a lot of smart people, and I consider Michael Kramer a pretty smart guy. How he looks at under the surface at liquidity, and the repo market is at the lowest point it's been in. It's sort of like he interprets it as really liquidity drying up. We've had some banks having to go to the window, but it's basically like the fund is very low, not enough to I guess keep the system greased. Has anyone been following that and what's happening in the repo market and what kind of implications there could be from this?
I personally only know that the repo market is indeed, the usage of it has declined sharply lately. And this is mostly for the time being interpreted as a sign of excess liquidity. That's what I can tell you about it.
Okay.
Because, you know, people find things like treasury bills more attractive as an alternative, right?
And also, I'm not sure that it de facto or per se means a drying up of liquidity, because even the treasury has shifted their funding program. So the market is there's a way of following there as well. And then you had so many attractions in those money market funds. It could become an issue if how should I say, if the Fed continues QT and dries and the repo market dries completely up, it can become an issue for the funding over the turn of the year. But I don't think that right now we could qualify it as being an issue.
Okay.
That's just my
All right, so you're going to keep an eyeball on this for us, Kay?
Into the year end, probably, yeah. Know where the liquidity levels are, because they typically there's a lot of companies and revals of books, etc. They probably need something. But remember also when they came up with that forced going to the repo, or going to that liquidity window. Actually, the banks, etc., they didn't even need to go there because they had so much liquidity that it was very obsolete, but they were forced to get there. So for as long as the take up over there, or the need over there is not getting out of hands, I don't see a huge problem with that right now. But
that would mean kind of a dollar shortage, wouldn't it?
Well, I mean, you remember last year there was a bit of a risk of that as well, but it actually nothing materialized.
You know what else? We're talking liquidity, and I have a guest in about 3 minutes. Jerry's going to be here. I want to go around the horn, but I don't know about you guys, but you know, this is the big case while you take partials, because I had a long from 112, and look at this
In Bitcoin.
weekly. Yeah, look at this weekly. All right, look at this divergence on the weekly. I'm not saying it's a top, but this is a pretty good reversal with nothing major happening, with the dollar, no risk off. Is this a market tell for a correction in S&Ps? Because I've seen Bitcoin lead it before, both ways. What do you guys think? Start with Ron. Go ahead, Steve.
I think it's too early to say, but yeah, especially in Bitcoin, we do see the signs of a pullback. Although we can't really forget that literally it was like 5-6 trading days ago. What was it? That
124.
That Bitcoin was producing a new all-time high, right? At 124, as you said.
Yeah. It's a big give back, and
and I think the huge area now of support should be at around 108, a previous all-time high, and some consolidation took place over there before we broke out to new highs. And but in the very short term, we might actually see a pullback. Ethereum is doing the same thing. Ethereum made it really, really close to hitting an all-time high as well, although it didn't. Right. Ethereum, in fact, still has its all-time high registered back in 2021. So that is still a divergence in play. Now, is this, to come back to your original question, is this a sign of, is this a leading indicator to equities perhaps pulling back as well? I guess we'll have to wait and see. Definitely, equities are also in need of some kind of a pullback. Right? They've been in a one-way street for quite some time.
Like gold.
Yes, although structurally speaking, technically speaking on the chart, they don't look anything alike at the moment, gold and the S&P or Bitcoin. Right? They look very differently.
Okay. They're all uptrends.
Yes, but I mean, if you take the last few months, they've been behaving in a totally different way.
Yeah.
For example, when we had that corrective move in equities, right?
The 2-day thing. Yeah.
No, I'm not talking about the 2-day thing. I'm talking about the beginning
In
of
April?
2025.
Oh,
Yes.
Yeah.
Until April, that corrective move in equities, nothing similar happened to gold and
Oh, yes, it did.
The move, nothing.
Gold and silver came up. They didn't make new lows, but
Yeah,
they took hits.
Yeah, but I mean, you know, in equities we went from like 61.50 back then to 48.20. Right? That was
20%.
That was a big move lower, right? And since then we've also had a very healthy recovery. I mean, we went again from 4,800 to 6,500 in the S&P. That's also a very big move. So they're not behaving in a similar way, but having registered 35% of an up move in the S&P, right, within a matter of just a few months, I mean, we can assume that some kind of a pullback is likely around the corner.
You know, I'm sure there's different patterns and different magnitudes, but for the most part, all the markets go up together and all the markets go down together. It's just a matter of degrees.
Unfortunately, this is a phenomenon we've had become very prominent since central banks decided that they don't want to let the market be free, but they want to, you know, micromanage everything, and that was the, you know, the result that came with it. Yeah, that was
right. So it's like, you know, it's when it's going up, it's exhaling, and when it pulls back, it inhales. But they all do, and a lot of it, I think, revolves around the dollar, and I think we may see that in the fourth quarter. Anyway, guys, Steve, I didn't think that you and Jerry's here, and I wanted to thank you guys for, you know, hanging out with me and giving me, you know, talking about things where there really isn't that much happening. So you guys are very creative.
Always our pleasure.
You know, I mean, it's always the toughest to sound like something's important when it really is kind of quiet. So anyway, I think we'll have some great trading this week, and we've got the team to guide you through this, everybody. And don't forget, the summer sale is still happening. Okay, the guys have kept it up on the board, so this is what you need to do. You need to join. And here's a look: 40% discounts. So I don't know. He may take it off after Labor Day. That's usually what happens. That's the end of summer. That's when the adults come back from the Hamptons, and markets, you know, volume expands, and the funds will generate move so they could position themselves. So why don't you position yourself as well in the chat room with traders that are at least as good as you, and I'm sure you're going to find a couple that are better. They rise to their level, and then you could also help out other people that you know, it's good for your soul to pay it forward and help others on their journey. I think you'll like it, and you could do that right here in the Forex Analytics community. Okay, so who's joining? Jerry, my guest. Jerry, could I interest you today in signing up here?
Enjoy the interview, Dale.
All right. All right. See you. Thanks, Steve. Thank you, team.
Yes.
Jerry, you will?
All right. I'm here. How are you?
I'm doing pretty good. Dale? It's been a while, buddy. What's new?
Oh, yeah. Well, it's kind kind of same old out there, right? The markets keep going higher. The government keeps digging a bigger hole. Bitcoin keeps getting more popular.
Yeah.
It's all kind of the same narrative. And it does seem like we've seen some of that money come off the sidelines that had been sitting with those expectation of rate cuts, you know, coming, ham-handed or not. Let me get my screen and I'll share it here.
Well, I like your new picture, black and white.
Oh, thank you.
Could have been a movie star, and you know, before they had talkies,
or an Elvis impersonator. I've been told.
Yeah, you're very good. You put me to shame.
Oh, so, come on.
Oh man, you are. Everyone's waiting for it at the end of the interview. So let's see the dashboard, bro. You have upside targets and like S&Ps and.
Yeah, let's talk about it. So this is just, you know, people come to followthemoney.com. We have our weekends charts page. We put these up every weekend. We cover many different markets. We like to follow trends. We specifically focus upon 3 different types of trends based upon the chart time frames. We focus on monthly, weekly, and daily. Each of those, of course, you know, in fact, let me open something else up that might be helpful here. I'm going to open up our latest issue of our Robinson report, because in it, here, let me open this up here also. When I'm talking about that, this kind of really makes real sense of these trends, so we can kind of visualize, you know, what's going on. So this will pull up, and let me just come down now to that page that I was referring to, which is here. So here's the current market trend. So we have a swing trend, which is our daily trend, and then we have our position, which is our weekly, and then a long term, which is the monthly. And you can see that right now the S&P and the NASDAQ, which we're using these ETFs as proxies, these are all well positioned. Gold softness on the near term. Dollar, a real mixed bag, of course, mainly pointing down, but still clinging, believe it or not, to a long term. Well, it hasn't entered a long-term downtrend yet, which is kind of interesting. Softness there on Bitcoin in the near term, but you know, overall still looking really good. And if we look at the second page, we'll see something interesting here as well. Russell 2000 beginning to join the club. We saw that recently happen. Yeah. That's an interesting talking point there. And then China. Guys, I don't know if folks are paying attention to China, but right now, take GXE, for example, a very thinly traded ETF. It's the S&P China ETF, and that ETF up, and that's a pretty broad, like 1,200 companies, so it gives you a nice broad exposure to the Chinese market, but it's extremely thinly traded. So we never trade it. We just use it for tracking purposes personally. And GXE is up 27% year to date. In fact, if you look at the current markets, you know, year to date, this was as of Friday's close. You get Ethereum sitting up here now toward the top. It's actually really come back, as your previous guest was saying. You know, we had that almost an all-time high. But then silver and gold, you know, look at these gains. China and Bitcoin. People aren't realizing that, yeah, they know about Ethereum, they know about silver, they know about gold, they know about Bitcoin. But China is practically tripling the S&P 500 this year, and they're sitting on a massive trade surplus, massive trade surplus. So it's interesting in this environment where the United States has been targeting other countries, trying to get its trade deficit under control, trying to get its ducks in a row. And China just continues to navigate this storm to their benefit. And I think it's interesting. But anyway, the Russell or the S&P up about 10%.
And keep kicking the can down the road with tariffs on China. This is exactly the game they want, isn't it? I mean, the longer it's confusing to have a deal with them, and the U.S. feel at risk by upsetting them, they could just keep stringing us along, right?
Oh, sure. Oh, yeah,
like
absolutely.
Like Putin.
Right. Exactly.
Only one's economic, one's military. But they're all economic, aren't they, Jerry?
That's ultimately in the end, right? All wars are bankers' wars in the end.
Yeah.
So yeah, but how about the budget deficit? We have a $291 billion budget deficit in July, right? That's here in the United States. That was 20% higher than the same time last year, that same month last year. Then on top of that, you have the national debt sitting at about $37 trillion. You know, you have inflation, beef, all-time highs. Eggs are still expensive. Electricity costs are going through the roof. And mainly due to AI demand, or a lot of it has to do with the AI data center demand. And you got the latest July PPI numbers came out. Those were they were hot. You know, they were up near 1% growth for the year over year.
So you never talk about bonds. Do you avoid them?
Yeah, it's not really my thing. It's I certainly
think they could ever work again.
Place.
You think they could ever work again, and under what circumstances?
You know, I think bonds have their place. I think there's other alternatives that people can consider. It's not something that's. I think that they have been exposed in many ways. Of course, over the last few years, people have seen, you know, they could lose just as much money in bonds as they did stocks. That was kind of, you know, to their chagrin. And I think that overall, I'm not interested in loaning the government any money. I'd rather loan it to somebody else than the government. I don't think they are thinking of me. I don't think they really care about me. And I also think that over time, it's going to become so burdensome to pay for these things. That's why we see you're talking exactly about what Trump has been pounding the table on with Jerome Powell. Basically, here's the line, Dale. Trump says this is the greatest economy ever. It's never been better, right? Under any circumstances, of course. So now, in this greatest economy ever, where everything is great, let's demand an emergency rate cut by 300 basis points from the Fed. Okay, nobody's ever heard of anything so zany in their life. Like, in other words, if it's not broke, you don't fix it.
Well, he wants to be like the Swiss, but that would turn us into Zimbabwe.
Right. We don't get to, we can't do that. You know, we got, and the thing is that, you know, the rates at current levels, nobody likes it. I certainly, unless you're making money off it, of course. But as far as paying the interest, you certainly don't want to. Mortgages are out of reach and things like that. But, you know, you just don't get to turn these things down because there's an election. I mean, I know that's how they do it. I know it's all politicized, but this is real dangerous when they start taking our money and they start doing these very blatant kind of manipulation games right in front of us. And we don't even know what's going on. That's the worst part, Dale. It's we think it's all a game or a big charade. We don't realize that these guys are talking about our children's future, that they're tacking on money that we can't pay for. They're tacking on debts that we can't pay for. And they all think it's a big joke. And they're all just trying to win re-election. So I got to be honest.
Why are they going with stablecoin?
Well, the stable coin is a really smart move. It reminds me of the 70s petrodollar system deal. Back in the 70s, right after the dollar came off the gold standard, when Nixon closed the window, they realized that they had to keep this artificial demand for the dollar. Up until that point, the artificial demand was, well, if I hold dollars, they're as good as gold. And so, okay, well, then I'll hold them. So it kind of created a demand. They didn't really necessarily have to have them, but it was a kind of a hedge. Well, they did need them, but not as much as they were going to need them in the petrodollar era. So after they decoupled from gold, then they said, well, you got to have dollars to buy oil from this country and this country. And pretty soon it was all countries. They made deals. And then, of course, that was good news for these oil producers because they would get weapons deals from the United States if they would price their oil in dollars, and that all worked out great. But that's been breaking down, as we all know. The stablecoin legislation is really, in my opinion, kind of a coup. It's kind of a way to prop up the dollar. The dollar is actually, in terms of its share of global trade and use, it's still way up there. You know, it's not like it's a completely
it's not the end
halted.
of the reserve currency status.
No, not necessarily. That's right. Absolutely. Yeah, we're not quite there. There's still robust demand everywhere, and it's still the majority used currency in most places. But the thing is that over time, we know that's not going to work out so well because of all the debt. And so you have to try to find other ways to create the demand. And the stable coins were brilliant. Stable coins, the United States understands these, that if these are US dollar backed, well, then you create the demand for the dollar. It's all underlying. You never see it. And it makes total sense for stable coins to be in use. I think they're going to create a lot of demand, incredible demand for Ethereum and for several other protocols, which are already benefiting from this legislation. But the stable coin is typically backed by the US dollar. And so therefore, it serves as a demand point for dollars as we move into a digital world. And it was smart for the US to get ahead of that. I think it's going to serve the US well going down the road. However, other countries can do the same thing, and I think that it's kind of a race now to the bottom. And I think one of the best things people can do who are listening to this, obviously they want to protect themselves. They want to protect their families. They see the writing on the wall, but at the same time, they keep seeing things go up. Is that we've said it over and over on this broadcast before, Dale, is that you got to invest in assets, right? You got to hold them. You got to buy assets, high quality assets, and hold them, because those things are going to go higher and higher and higher because of our economic debt-based monetary system. Our debt-based monetary system just basically drives up asset prices. And that's why the rich keep getting richer and the poor keep getting poorer, is because the rich own the assets, And I think a mixture of assets, some stocks, right? Some Bitcoin, some real estate, some some business interests, just spreading around the wealth and trying to focus on high quality assets is the very best thing. And then doing it consistently, dollar cost averaging, those types of things, and then learning to trade around those things. It takes effort, but we're in a pickle here, and it's important.
Well, okay, you talk about this pickle, and you talk about owning assets, and I know there's a difference between what financial markets are doing and what the economy is doing. And they could de-link for a while. But when you talk about this pickle, isn't there room during this pickle for it to go the other way and we're so leveraged, we're so financialized that there could be a huge liquidation break, especially as more supply comes on. I guess there's a wall of rolling over debt early next year from corporations that borrowed at zero. I mean, there has to be a price for the pickle. They don't give them away free.
Well, there's definitely a price. It's like a game of musical chairs. Who's going to pay the price? I don't know. Here's who I know.
Everybody.
Everybody's going to have to, at some point. But the thing is that
the 1%.
Perhaps because they're able to weather it. Yeah. But the thing is that inevitably. But I have to be kind of sadistic here, briefly, and say that as a person who likes to invest in high quality assets, I almost invite the next sell off. I almost I would be just fine with it. In fact, here's how we know how trigger happy Mr. Trump is that when we went through the last time that he was in office, he racked up, I think, close to I think it was $8 trillion in national debt. So he was tacking on like $2 trillion a year to the national debt. Now, some of that was COVID, but that's the point. That's the whole point, is that, not to make it political, but remember, just think about how this works. He said that COVID wasn't a big deal. Okay. He spent more money on COVID than anybody had ever dreamed of. So if it wasn't real, yet he spent money on it. So if it's not real and you spend money on it, that's not very smart. And so the point is that even things that he don't think is real, he's going to spend trillions of dollars on. So if he thinks something is real, he's definitely going to spend the money. Point being is that if we have another crater in the market, guess what Mr. T is going to do, right? He's going to be pumping so much money, it'll make your head spin. And that's going to drive the markets right back. Last thing this guy wants is a losing year in the stock market. Now,
yeah, especially going into midterms.
Absolutely. Yeah, they're going to put lipstick all over that pig. And so, and they have a lot, and people want it. So we're in a situation where owning assets, yes, you're going to have those moments where they're gut wrenching and you got to weather through. But in my opinion, you just continue to add in those moments. And remember,
so you would welcome a 50% sell off.
It would hurt, it would make me feel sick to my stomach, but I'd be buying it. Yeah, okay. I would be buying it, and I would be looking.
There's a man with conviction. So you're not going to even try and dance out of the way. You would just ride it out, wait for your buy signals to develop again.
Yeah, because the way we approach it is that we've been taking gains in this environment. So every week, almost every week, over the last last couple months, I've just been pruning NVIDIA. So that's our largest holding. And it's up, if you look at it on the monthly chart, like it's way up there in terms of the monthly RSI. And so it's
diverging everywhere too.
Yeah. And so,
I know why you're doing it.
And so we're taking money out of NVIDIA. We're looking forward to taking some money out of Apple because it started its next up move and it's above its 200-day again. And so we're going to take some money out of that. And then, so we take money in these good times. And then when it gets hurt or when things go down and assets prices get hurt, well, that's when we want to move in and buy more. And so, you take it in time, like you buy it in times like.
Yeah, NVIDIA would be a great
rinse and repeat.
Yeah, 150, buying NVIDIA 140. If it got down there, it'd be a great buy.
Yeah, absolutely.
Yeah.
Yeah.
All right. So highest conviction trade going into the fall, because you and I will be talking again in November. So
I would say, at the beginning of the year, we had said we expected the NASDAQ and the S&P, to do well. We expect use the 500 as the benchmark. So NASDAQ, we expected to beat the S&P. So far it is. We expected gold to have a great year. It's doing great. We expected the dollar to fall because that's what it typically does when Trump comes into office.
That was a great call.
Yeah, so that one definitely went down. We expected silver to go up. We expected China to go up because they win. We didn't say much about crude, but then Bitcoin and Ethereum were two of the markets that we expected to do very well. And quite frankly, they've done incredibly well over the last little bit. 2025 has been a good year. But I think if you're talking about highest conviction trade, it would have to be Bitcoin and Ethereum. I think both of them are going to have a really, really great year. And it's interesting because Ethereum was so ignored for so long. Yeah. And it was a market that, we've been long Ethereum since 2017. So that was like we were very excited about Ethereum when it came out. It was like trading for $12 or whatever. It was an asset that we thought was going to do well, and it did, but it kind of got overlooked even though of its dominance. And now we can see prices knock at the door of the former high. In fact, I think this chart is a little bit, there's the 2021 high there. So we expect that this is going to be violated to the upside. And the reason why we are so bullish on Ethereum in particular is because, quite frankly, it's more of a productive asset than Bitcoin in terms of the fact that it pays a yield, and Wall Street loves it. And you were talking about bonds, and about why do people buy bonds? Well, they want a yield, and so Ethereum is kind of like this really, its time has kind of come.
It's a new instrument. Yeah.
It's a new instrument. People are excited about digital assets, and then, it has a yield as well. And so I think Ethereum is just Wall Street's dream. It's their fever dream. And I think you're going to see this price maybe go to a level, and I'm not going to give a price prediction, but I do think you could see it double, triple, over the next few years. And it really wouldn't move the needle too much in terms of the of its place. So in fact, I think for it to get to Bitcoin's market cap today, it would have to be at around 20,000. I think if I did the math right last time I looked at it.
Yeah, it's not doing that.
So, so it's still got a long ways to go. I think there's going to be a great move into Ethereum, and I think that's another place to to think about is the reason I like Ethereum, Dale, is because it reminds me of the rails that were built across the country back in the early days. So if you were lucky,
Yeah.
you could have got in. Somebody could have been building the train tracks across your land or whatever, and you could have got a cut, of all the business being done. And that's how Ethereum is. Ethereum is quite frankly, a very boring topic. It's exciting because, and stable coins, for example, was so boring. I mean, it's just cash on chain. I mean, it's the most boring. But it's the first killer app. It's the first killer app. So we're like, oh, okay, so cash on chain. So the stable coin. But actually later on, we're not going to be really enthused about stable coins. But right now it's new, it's novel, it's shiny. The same thing with Ethereum. Ethereum is like it's like the protocol that undergirds all of these transactions. And today it's like in focus. But I think we've talked about this before, but back during the .com bubble, we were getting excited about applications, not the protocol. People weren't like, I'm investing in TCP/IP, or I'm so excited about HTTPS. No, nobody even knows that. That's what Ethereum is. Nobody knows what that is. What they invested in was YouTube. YouTube is sitting on top of HTTPS, or here's Facebook. It's sitting on top of TCP/IP. So these protocols are built, and so Ethereum is that protocol. It is the rails, if you will. And so being able to buy a piece of that and then get a yield from it is kind of nice. But of course, you're probably going to make even more money from the eventual dApps, the digital apps that'll be built atop of it. And you and I aren't talking about those currently. See, the stablecoin is the first killer app, so to speak, dApp. But there's going to be many more things that come out of Ethereum. Eventually, the idea of owning the rails underneath all of this will be like a utility stock. It'd be kind of boring. Who would go out and, that's not really what you would think of. You would think of the sexy things built on top of it. So right now, Ethereum is still a catch, I think. But, I think over time, it's going to fade. It'll be less interesting and less exciting. And all of the dApps that are built on top of it will be catching our attention. There'll probably be lots of money made there.
It's funny you talk about the railroads, because I was watching a video and the guy was talking about AI and, how there could be, a bust, but also most revolutionary thing in our lifetime, just like the other stages we went through. And got what he was talking about, that we could have that happen again, where .com, a lot of companies went away, but the internet still revolutionized everything. So you could have both.
Right.
You could have both. I wanted to ask you if you grew friendly to cannabis stocks, because it seems like it might have been your style with real long-term bases, and they've kind of broken out in the last couple of weeks.
Yes, let me pull up a couple of charts because I got a couple of cool ones. That's a market that I was in way too early, and I admit it. I got in way too early on cannabis, but I just stayed and I kept adding, and I think overall it's going to pay off. One of the ones that I got into early was Cresco Labs. Here's a chart of it. So I own Cresco Labs as an investment. I was attracted to this company. It's
Almost a triple.
But I was attracted to this company back in it's like 2018, 2019. I can't remember, 2020, where the company there was another company out in California called Origin House. Man, they had branding down so well. They really figured it out, and I thought this company is going to do well. And as soon as I went to go buy them, they were trading. And I went to buy it, and then Cresco came and swallowed them up. I said, well, who's this? Who's Cresco? And so I started looking at Cresco, and I said, oh, okay, well, smart guys. They saw the same thing I did, and they bought it. They got a good deal on it.
Are they U.S. or Canadian? U.S. Good.
Yeah, they're U.S. So Cresco is one of the ones that we really like. I think it's going to do well. We've already seen it pop here. The news was Wall Street Journal report came out a few days ago and just basically said that at the beginning of the month there was $1 million a plate fundraiser going on at the New Jersey Trump Club golf club, and apparently Kim Rivers from TrueLeaf. Let me show you that chart.
I know Cureleaf. But
And Curaleaf also, that's much more of a global play. They just opened up a new
Germany.
They just opened, they just opened up a new deal in Germany. See, here's True. Let's see, where's Trueleaf? I've got it here somewhere. Well, yeah, this one's fine. But Trueleaf,
I
Kim
talked
Rivers.
about. Hey George, you remember me talking about cannabis before Trump talked about it? So that was one of the reasons they were going to reclassify. All right.
Yeah, well, and it makes total sense that they would reclassify. I mean, if you look at the things now, I think they're ranked right next to heroin. You know, it's like heroin and and methamphetamines and then cannabis, and it's like that doesn't make much sense. And so they're catching up. But Curaleaf, yeah, Curaleaf is another one that I like, and it's also had a great run. Boris, I forget his last name. Boris is the he's a Russian or background, you know, Russian family, but they're running Curaleaf.
Buy a wave two pullback is how it looks like to me. You know, if I pulled back to $1.50 or so in the next few weeks, I'd step in, because the bottom before was a theory, right, Jerry? I mean, we're just moving sideways, and until it really had a heartbeat again, you know, because it kept going sideways. But now we have the evidence of a low. So if there are pullbacks, that's an opportunity, not a theory anymore.
Absolutely. And so you could, I wasn't thinking about cannabis, but you could also throw cannabis in potentially as a high conviction trade into the end of the year, because we do that. We do get that reclassification. You could really see these things zoom higher, you know, for sure.
Yeah. What a great interview. And you know what? Everyone's giving you compliments. So people like the F.A.C.E crowd likes you, Jer. So you want to wrap it with a little Elvis?
After you, my friend.
If I said I needed you, you said you would always stay. All right, your turn.
Oh, that's good. That's good. Let's see. I always do Burning Love for some reason. Why do I always do the same one? Lord, I feel my temperature rising.
Oh, this guy's good. Huh? Tell me this isn't a great interview. Anyway, entertainment, compelling ideas, you know. Anyway, I always enjoy hanging out with you for half an hour, Jerry.
You were a good man, Charlie Brown.
Maybe one day we'll be able to break bread together. Who knows?
I would love that. I would love it. You stay strong and stay healthy and stay
buddy.
Stay at peace, buddy.
And listen, people follow Jerry at the minimum on X. And why don't you show them your website so they know where to go?
Yeah.
To learn about not just how to get in, but learning how not to get out.
Yes.
And learning how to hold. Look, I'm still learning how not to get out.
Oh, we're all learning. We're all learning.
Still, you seem to have more. You have the patience of Job compared to me, buddy. All right.
Yeah, I didn't for a long time. It took a long time, and we love to teach that. So, folks, like some of the guidance, I like some of these charts. I'd like to learn more. Well, we do a weekly call just like these. We do a webcast every Tuesday morning. Not every day like you guys. You guys have a lot going on. We do a once a week webcast. That's every Tuesday, live for our members. And you can join any of these levels here if you want to be a part of that, get access to our trading software, all those trends we were talking about. Every day we put out a new trading idea, complete with buy and sell alerts, the whole 9 yards. Or maybe you say, I don't want to become a member right now, but I wouldn't mind buying a course. You just come over to followthemoney.com and click on the shop button. And we've got options trading, we've got swing trading, we've got day trading, we've got Bitcoin, we've got, a trend trading, we've got 3X ETFs and book Bankruptcy of Our Nation and all that stuff in our store. Yeah. So you could just buy something and just kind of kick the tires. But also, as Dale was saying, we have that, of course, our X feed, FTM, like Follow the Money, FTM Daily, and then also our YouTube channel. And we have lots of podcasts and things like that. So I really appreciate the opportunity to let folks know how they can educate themselves. We've been educating folks here since 2010, and we have folks all over the world. It's been a blessing for us and for others.
Yeah, and you teach an important thing. It's one thing to make a good call. It's better to make the trade, and the toughest part is the hold. So
Yes.
if you could learn
Yes.
hold strategy from Jerry, and it's not like inherent in you, um, that's worth gold. So that's a wrap. Jerry, thank you, buddy.
Thank you, sir.
Good doing a little open mic with you at the end, and we'll catch each other in November before Thanksgiving, buddy. Okay.
It'd be great. Look forward to it.
Jerry Robinson, everyone. Calm demeanor, great radio voice, and he's an entertainer too. With an entertainer with financial wisdom. You know, a lot of entertainers wish they had it when they were making the big bucks, but then they went broke. So Jerry could counsel stars and athletes and everyone to make sure, and just average people, because you know, we like to spend, and if you want to build a legacy for your family, you have to learn how to build wealth, not just trade. So
True
that's a
that.
wrap. Take it easy, Jer. Good talking
Okay,
to
you
you,
too, buddy.
buddy. All right.
Take care.
You're welcome, Will. You're welcome, Galaxy. You're welcome, everybody. Don't just count your pips, count your blessings, and see you for Turnaround Tuesday. Adios. Thanks, Jer.
Thank you, bud.